Okay, now. Hello, Warriors. I hope everyone had a good Fed session. And a few of the things we talked about yesterday, I'm going to go over and cover them and see if I was all wet or that my RSI stuff is something you may want to learn. If you interested in learning, you come into our main chat room at www.tradegatehub.com. If what I'm doing here on YouTube is adding value to what you're trying to accomplish in a very difficult endeavor, give me a thumbs up and come and say hello, bring your charts. I'm willing to collaborate and pass on what took me a lot of blood, sweat, and tears to learn. Also, I've learned from others, and it's not an easy road. So if I could help you avoid some of the mistakes I made for years and save you some of that grief, I think I'm doing my job and give you a whole new way of looking at markets holistically, looking at intermarket relationships and also some timing tools. So if you watched yesterday's video, I was talking about that I thought the dollar would make one more high, and the reason was we had a confirmed high up here. See this high, and the RSI reading well over 70, so that's a confirmed high. And markets, according to what I've learned over the years, rarely peak when momentum and price, momentum is confirming price. So after the Fed, we initially the dollar sold off a little bit, but then I think he made some type of semi-hawkish comment that gave the dollar a lift. And as you can see, we made the new high as forecasted up here. I was a seller up there, and notice the fact that we did diverge on this time frame, on the 4-hour time frame. Let's take a look at the two. Two was even more glaring. Look at this between here and there, right? And I can't rule out one more shot up for a 3. That's something else I teach, but I'd say this is a pretty negative day in the dollar. And looking at the daily, your risk is now above the high. So, if you took the trade up there at new highs, you have about 40 pips made. You take half, and now you trail your stop to BE on the dollar. I don't know if you went with euro. Euro had a similar situation. This 1750 level, really, look how it came into play again here. So, we rallied, made a new low, but you could see the divergence here in euro as well. So, if you went with the euro, not a bad trade, only made new lows by about 20 pips on this big candle. You had to wait for it to start doing something right. Where cable's concerned, I talked about the divergences developing here. Okay, same type of scenario, and pound is way outperforming the euro. So things have shifted. As you know, I talk about euro pound for the preferred long and short between euro and cable. And this is a pretty negative day. We couldn't even get back above 86.20. Now it looks like we're destined for new lows. So with this being the case, cable is now your preferred long when you're bearish a dollar, and euro's your preferred short when you're bullish a dollar. Because this looks like if we don't hold here at this 85.50 level, that we could get another test for new lows. And that tells me that, if I want to be bearish a dollar, I'll look for a break to buy in cable after this initial wave runs its course. So looking at yen, it's still a conundrum. I was talking to another trader friend of mine, and we've been in this rectangle forever. And tell me if this looks familiar. That look at that rectangle, and now look at this rectangle right here. So it's all about yields right now, and yields are pushing up against resistance now. I think they're going to go this time. They've knocked at the door about 4 times. So I think the action that we have today is pretty significant. And, it's counterintuitive. When you think with higher rates, you would see a stronger dollar. Okay, and The weak dollar is supporting stock indexes, but surprisingly, with a weak dollar, because I was calling for 1755 gold, but I can't buy the gold when you have the dollar index down 30 and the gold, even though this is my support zone. So I'm going to have to see it do something right. Otherwise, we're, going to make a new low. Silver starting to look better. I think the ratio might be turning. So we're getting a couple turns in some of the ratios and some of the pairs. Euro pound looks like a shift is taking place where now pound will outperform euro. And now in the metals, it's been gold outperforming for quite some time, and I'm seeing a little bit of a shift here. You could see it today. It's pretty visible in the charts. Gold looks like it's going to push to new lows here. Okay. The other currencies I talked about was that I was very constructive on Aussie. And the reason was it wasn't making a new low, like euro kept making lower lows, right? Pound kept making lower lows here. But Aussie kept holding. See this? So even after the Fed and the dollar made a new high, Aussie didn't make a new low. So it's good to have a handle on, what's holding up the best is going to become your preferred long, and Aussie looking good. If you went with me and I posted the trades yesterday afternoon for short dollar and long Aussie, you paid 30 for them. So you're up about 55, 60 pips now. And you could just take half right now, put it in the bank, take your wife out for a nice dinner. And, every once in a while, pull some equity from your account. So brokers probably don't like me saying this, but, make it real. Okay, so when it's just sitting in your account, it's just a digit that vacillates, but, go out and be good to yourself and your family and enjoy the product of your labor and mental energy that you put into trading. I think that's a big part of enjoying your life as a trader, is to also be good to yourself and to those you care about with some of your successes in the market, maybe even help out some people that need it. So precious metals, yeah, it's an I don't know for me now. Actually, I was looking for the market. All my narratives don't play out to the T. And we'll see if this one still can. I just am surprised that it's this weak with a weak dollar. So, you have to be willing to take in new information and process it and not be stubborn. One of my favorite expressions, and you guys need to write it down, is if you don't learn how to change your mind, you won't have any change left. Okay, so let's get to the indexes now. S&Ps followed through even today, but take a look at where it's stalled, and I'm not saying that this is the end of it. We could stretch. There's some Gartley patterns that people are talking about. Blake Morrow talked about it at Forex Analytics, that we could trade 450. I do a lot of intelligence gathering, but let me tell you something that is a little bit of a shift. NASDAQ has been outperforming. It's been stronger on up days and hasn't given up as much on down days. But with the S&Ps up 22 right now, kind of look like they could push the highs again. This is kind of weak action in NASDAQ. And one of the reasons for that can be people are very loaded up with tech. And tech has the valuations are affected by rates. And look at what's happening to the bond market. Look what's happening to 10 years. So higher rates affect the valuations of big tech. Cyclicals can handle higher rates better than the mega cap techs, and it's a very crowded trade because they've been outperforming for a while. So Well, let's take a look at a few of those issues. Apple filled the gap. We had a breakaway gap that I was hoping would hold, but it didn't. But here's a look at Apple. So it was this gap we left on the way down. But, pretty weak bounce after, we were talking about up here at the top of the wedge and then the breakdown of the wedge. And, this relieves some of its overbought conditions. But to me, it looks like a bear flag off this straight line move. And, unless we recapture 150, Apple still looks pretty negative to me. Tesla, could make a new high, but it will not confirm on multiple time frames. Amazon pretty weak. We were just talking about it last week on being unable to fill the earnings gap, and we have followed through to the downside. We got oversold and we have a little bounce. This could be a line in the sand. I don't think we should trade back over, say, 34.40. That's about 55 bucks from here. Microsoft bounced pretty nicely too, and right off this moving average. So far, all it's done is fill the gap, and it looks like it could be rolling over here. Kind of looks like a bear flag to me too. Straight line move, maybe 50% retracement flag, and looks lower. Google, this looks like a bear flag to me. We had a big distribution top, and it's going to have some problems under 27.85. Netflix has been one of the leaders. Doesn't comparatively, it's one. It doesn't look that bad. We have a confirmed high here, and then Facebook, which got drilled, and we talked about the divergences up here at 380. Here we are, $40 lower. It does not look good to me. And here's my bet on that. I believe this is going to be just a correction. This bounce, even if it has legs and lasts a little longer, like the S&Ps are making new highs now, or trying to make new highs. My bet is that this confirmed low ends up not being the low. Okay, so let's test out my RSI narrative, and let's see how many time frames we had a confirmed low after Monday's sell-off. That was a 4-hour. Here's the 2 confirmed low. All right, so we have some confirmed lows on the 2 and the 4, and it's my bet that this isn't the low because the low was confirmed. So I hope that you're able to take advantage of some of the things that I was talking about in the dollar, that you didn't chase gold at 1780 like I almost felt like doing, but I never do. I don't chase. Let trades come to you. And just looking at what's happening, yields look like they're finally going to head up. And we'll see what type of staying power this rally in equities has. There's a theory called the cockroach theory. And, Evergrande is, everyone thinks it's solved. It may not be, but you know what? If you ever see one cockroach, it's usually not the only one. So this credit contraction that we're getting in China, I've interviewed many traders that said it's starting to happen here, and that's why the Fed is involved in all of these reverse repos. So anyway, successful post-Fed. Want to welcome everyone to TradeGateHub.com. You could hear Michael, I believe he's on today or tomorrow at 11 Eastern time. Michael Venezia is one of the best stock selectors I've seen, and covers a lot of ground on many different sectors. Actually willing to share even his Twitter list of his curated list of people that he follows. And that took years to develop a list like that for having good people to follow. So Michael's a believer in intelligence gathering as well, and he has skills. So if stocks are your game, it'd be great for you to come in and see what you could learn from Michael. And that's a wrap. And just want to tell everyone heading into tomorrow, I don't just count your Krugerrands or your silver bars or your Bitcoins or your ETFs. Count your blessings that you're able to participate in financial Disneyland, the most interesting crossword puzzle in the cosmos are the financial markets. So that's a wrap, everyone. I'll see you guys either tomorrow or next week. Good hunting the rest of the day. This is Dale Pinkert at TradeGateHub.com, where our mission is to build up an edified trade